Hello from Bloomington. I'm Heidi Kessner, Dean of the Kelley School of Business. I want to thank you for participating in this important roundtable discussion. Wherever you are in the world, the pandemic has been and continues to be challenging on many levels. Many are experiencing stress and heartache from losing family and friends. In addition, the pandemic has disrupted our everyday lives and livelihoods on a global scale. And of course, there are ample uncertainties going forward. I think we can all agree we still have very challenging paths to navigate, paths that require short-term and long-term solutions. As we look forward to recovery, it's imperative that we share ideas, insights, and best practices so we can lift each other up and press ahead on solid footing. We'll have to be nimble as well, opening ourselves up to new ideas and visions wherever they may take us. The pandemic has certainly shown us just how interconnected we are. We are truly all in this together, and we will recover together. I urge you to keep the conversation going long after this roundtable program ends. Thank you again for participating, and please stay healthy and safe.
Good morning or good afternoon, wherever you happen to be. I'd like to welcome you to the Indiana University Kelley School of Business's Worldwide Roundtable Discussion. My name is Levon Schlegel, and I'm the Executive Director of the Institute for International Business, or IIB as we're more casually known, here at the Kelley School. I would like to thank Dean Kessner for kicking off our second set of roundtables in our IIB's 10th anniversary celebration programming. And thank you all for joining us as we begin the first of our 5 global panels. During these 2 days, we have distinguished speakers in Sub-Saharan Africa, Mexico and Latin America, the Middle East, North Africa, China, and the US, all gathering to tackle a topic that's on everyone's mind, the economic recovery post-pandemic. You are among the more than 800 registrants to these 5 events. And as you can imagine, it took a global team to put these together. I would like to thank Jen Goyens and Allison DeWitt of the Kelley School's Alumni Association, Roy Hooper of the IU Alumni Association, Ali Batten, Director of the IU Global Gateways, Rob Clintoning and Rebecca Salerno of Kelley Marketing, Zach Watt and Brian Boucher of the Kelley Learning Media team. And finally, I would like to thank Tim Smith. You'll all have a chance to meet Tim during the Q&A, but from IIB's perspective, none of this would have happened without him. The last year has been unprecedented in our lifetime. The COVID-19 virus has forced us all to redefine how we work, how we communicate, and even how we buy groceries. Individually, our worlds have gotten so much smaller. And with that, our purchasing behaviors have changed so dramatically. From hoarding essential items to not participating in the local economies of our cities, our relationship with the global economy has changed regardless of where we are in the world. Unemployment is high. Supply chains are challenged. Transportation and logistics have had to redefine the way they deliver products and services. We have asked our panel to explore what this means. How do we kickstart our local, regional, and world economies to return to some level of normality? And in parallel to regenerating what we had, we need to ask, what did we learn so we are prepared for the next time? And maybe most importantly, what are the good ideas that emerged from this massive macro disruption that need to continue? Not a small topic. But that said, our moderator and our panel for the day are more than up to the task. It is my pleasure to introduce today's moderator, Dr. Adrian Seville. Adrian holds a Bachelor of Arts, MCOM, and a PhD in economics, for which he was awarded the Economic Society of South Africa's Founders Medal. He is a UNESCO laureate, a matriculant of Linacre College in Oxford, and has completed programs in investing at New York's Columbia University, competitive strategy at the Harvard Business School in Boston, machine learning at Stanford, and game theory at the University of British Columbia. In 1984, Adrian formed an investment vehicle that today is Cannon Asset Managers, where he serves as chief executive. He holds a professorship in economics, finance, and strategy at the Gordon Institute of Business Science and is the author of the Visa Africa Integration Index and the Investec Gibbs Saving Index. He has worked in many countries across the continent of Africa, in Europe, and the United States. Since 2019, he has also been involved in the development of an impact measurement and monitoring tool for a private equity fund in the ICT sector. And since 2017 has chaired the investment committee of Meta Capital's venture capital fund. Adrian is a member of various industry bodies, including the Academy of International Business, the Strategic Management Society, Investment Analyst Society, Economic Society of South Africa, the Economic History Society of Southern Africa, and the Manual of Ideas. Before I welcome Adrian, I want to remind everybody that we will be taking questions through the Q&A function throughout the event, and there will be a moderated Q&A time at the end of the event. So Adrian, welcome. Thank you for joining us today, and I look forward to hearing what you and the panel have to say.
Yvonne, thank you for your words of welcome and for hosting us this afternoon. It's my great pleasure to look after this panel conversation. I'll introduce each of the panel members in a moment, but perhaps it's appropriate to start with the observation that, as you rightly observe, we are all in this together, but we come with very different contexts and lenses. The temptation, in fact, very often the default position, is to regard Africa as a place. And if I look around this table at the panel members, I think it emphasizes and reinforces the importance of understanding Pan-African context. Where I'm speaking from this afternoon, Johannesburg, South Africa, we come off the back of a year in which the economy shrunk 7%. Oil-sensitive neighbors such as Angola had even sharper contractions. And then we find heavily commodity-reliant economies like Zambia being pushed into financial stress. And in the west, of Africa, remarkable responses. Two striking examples, I think, come in the form of Senegal and Ghana, where Ghana has produced a COVID-19 rapid test kit, and Senegal has produced artificial intelligence to assist medical practitioners. So that's the backdrop of the lens that we will use to explore and interrogate. Lavon, you spent a long time going through my CV, and I know people aren't here to listen to CVs, but the panelists that are with me bring such incredible and extensive backgrounds and experience that I'm going to follow your lead and work through each of their CVs. So in no particular order, Megan Curran is the West Africa Director for Acumen, a social investment firm that uses philanthropic capital, i.e. grants, to make equity investments in early stage companies serving low-income customers. Acumen's unique patient capital model recycles returns from its investment back into the portfolio, which means that they, rather than return capital, which means that they multiply or amplify the impact of the philanthropic dollar. Megan is based in Lagos, Nigeria, and oversees investing strategy, leadership development, and fundraising. She joined Acumen in 2013 and served in several operational roles before relocating to West Africa. Megan's commitment to using market-driven solutions to tackle problems of poverty is rooted in experience as a Peace Corps volunteer in Guatemala, after which she facilitated microfinance loans from Grameen America, the US affiliate of Muhammad Yunus's Grameen Bank. Megan holds an MBA from the Kelley School of Business at Indiana University and a bachelor's degree from the American University of Political Science. The second panel member is Adan Abbey. Adan Abbey is co-founder and president of Horn of Africa Insurance, headquartered in Hargeisa, Somaliland. The company offers auto, property, medical, and marine cargo coverage in Somaliland and Somalia. Adam began his career at Liberty Mutual Insurance in Boston, where he served as a senior financial analyst in the personal markets division, as well as with Liberty International Underwriters, looking after specialty lines, reporting to the CFO. His experience includes managing large insurance portfolios, looking after risk mitigation measures, and corporate strategy. Before that, he was at Abadias, where he served as an associate brand manager, looking after a multi-billion-dollar portfolio. Adam holds a bachelor's degree in finance from Connecticut and MBA in marketing and management from yours truly, Kelley School of Business. Ejikani is founder and CEO of Afian Health. He and his team are using technology to drive 3 therapeutic areas: orthopedic rehabilitation, pharmaceuticals, and tissue restoration. From Lagos, where there is a hub for commercial operations, Dubai, where there is a hub for financial operations, and San Francisco, where there is a hub for strategy and innovation. The business is involved in developing and integrating platforms that optimize the use of portfolio with innovative solutions. Ejik has expertise in driving and capturing business value through development, marketing, sales, leadership across a range of industries: biomed, virology, medical devices, multiple geographies, North America, Latin America, Africa, and has an undergraduate degree from Truman State University and an MBA in marketing from Kelley School of Business. And then fourth, but not least, and I did promise that all of these bios are worth going through in just a little detail. Pimi has led the Cummins Africa Middle East since September 2018. Prior to this, Terry led the Cummins South Africa business from January 16, leveraging strategic acumen and regional knowledge to pursue opportunities in Zambia, which has already had a mention in our panel, Zambia and Mozambique. Terry joined Cummins in 2009 in corporate strategy in Columbus, USA, where he led several projects involving growth, profitability, divestiture, and acquisition. In 2011, Terry was appointed Africa Mining Business Leader. In 2014, he assumed the role of GM of Cummins North and West Africa, overseeing the deployment and consolidation of company-owned entities in Morocco, Senegal, Cote d'Ivoire, Ghana, and today is based in Johannesburg, South Africa, my neighbor. Terry has a Bachelor of Science in Mechanical Engineering from University of Yaoundé. He holds an MBA with majors in finance and strategy from Indiana University. I'm getting tongue-tied, and a certificate in mining studies from the University of British Columbia. That's a lot of literature to work through in an intro to a panel, but I'm going to invite my panelists now to join me in the room. Thank you, everyone. Welcome, and to the people on the session with us. It's my pleasure and privilege to host you. We've already had a little bit of a dialogue ahead of this afternoon's panel, and my immediate deep dive in getting you into our jump-off panel conversation was to ask you all to lead with a response to an opening observation. And the opening observation is that the global pandemic has changed the world economy, contracting 4.5% last year. What are some of the macroeconomic implications that you are witnessing in your different geographies and industries? And how do you believe those changes would impact the recovery efforts in your country, in your region? And do you anticipate these changes to be transitory, or do you have a sense that this is changed for good and that we will need something different? And so in no particular order, I have a random dice, and I'm going to suggest that Megan, you go first. Welcome and thank you.
Thanks so much, Adrian, and thank you for the introduction. Yeah, I think when we think about some of the macroeconomic trends that have impacted our work and the work of the companies that we invest in, obviously some of the biggest have been global trade disruptions, whether it's our companies that are trying to import solar home systems or inputs for different agribusinesses that could no longer access the supply they needed from Europe. And alongside, rises in unemployment and currency depreciation as well. But to the question on, what's here to stay and what do we need to do for the new normal? Acumen in some ways has been advocating for a new normal since before COVID, on the underlying assumption that our current economic systems are not working for everyone. The majority of the benefit is concentrated with a small group of us, and there are large numbers of people, frankly, living in poverty. And so, yeah, our work has been to push to kind of recreate and reimagine some of those systems. We've used investment capital to invest in social entrepreneurs that we think in some sectors are using innovation to bypass where government is unable to meet the needs of some of these communities, but increasingly believe that there's a larger role that not only early stage entrepreneurs, but large scale corporates can play as well in kind of calibrating what a new normal might look like, where everyone can thrive. And not just have that wealth concentration and the access to goods and services limited to so few. So I'll stop there. And,
we're gonna come back to your business model in a moment, because it's particularly important. In that it is impact, and B, that it has the capacity to compound. So let's come back and explore that in a little more depth. Perhaps Thierry, if I can come to you now, it will come as no surprise, of course, given your industry, you've had to have experienced would volatile be a polite word for 2020?
Yes, no, absolutely, Adrian. And so 2020 has been a year that the least we could say is unprecedented. So no matter how we plan scenario of risk, so the way things that happened that were not, we couldn't plan for. And quite frankly, it affected the Sub-Saharan Africa in different ways. So I will speak more specifically to the region, because I've been back in the region for 7 years now. The informal sector has been heavily impacted, small businesses, and think about transportation, hospitalization, restoration, all those businesses have been heavily impacted. The change with more people also working from home and less people traveling, it's going to clearly slow the recovery process in this country, because outside of exporting like commodities or natural goods or crops, so our economy thrives a lot into so tourism, and then small business and players operating in that sectors. A lot of suppliers have been wiped away. If you think in downtown Johannesburg in Sandton, several restaurants where business dinners were happening every day have just closed. With lockdown going more than 6 months, and no business happening, and the fixed costs and then the charges not changing, a lot of them have just closed shop.
And would your sense be that those businesses are gone for good, or do you think that the building back could see recovery?
Right. No, that's a good question, Adrian. I think that the outlook is a bit mixed at this point. So it's very early to anticipate a definite recovery, because the recovery is there. The second half of last year was clearly better than the first half, but all that is still sequential. So we're still kind of evaluating whether it's a slush kind of recovery or really an L shape. And so that we need to monitor that pretty carefully. What came that is good though is commodity price have also bounced. Some commodity like copper, iron ore, and all this, they kind of on steroid. but it's difficult from where we stand today to think that this is sustained recovery. So I think this may be more of a correction from last year's drop, than an outward demand increase that will be like a long term, and that could give us another ride of the mining super cycle like we saw in the early 2010. So yeah, that's what's happening. And in the end, what we sure of is that the new normal will clearly not be like the old normal. So it's important for government, private sector, and maybe a social sector alike to be thinking differently on what some of the things will just not be like in the past.
Let's come back to that thinking differently in a moment. Adin, I'm coming to you. You live in, or you are based in do business in a part of the world that needs no introduction to volatility and challenges. So I would cheekily suggest that 2020 was no problem. You take it in your stride. But of course, that is that's not a sensible observation. So how have things been in your part of the world, Horn of Africa, and in insurance particularly?
Yeah, no, absolutely. I think, one of the things that you see in the African economy is that it has typically shown a lot of resilience. When you look at the global financial crisis, for example, Africa was a little bit insulated from a lot of those economic shocks. When you look at Ebola, same thing. COVID is a little bit different. It's an equalizer in a way. I think everybody is at risk from a scientific perspective, and that puts a lot of people at ease, or at dis-ease rather. But at the same time, what we've seen is largely the rich are getting richer, the poor are getting poorer. That's the bottom line. I think across Africa, but also particularly in the Horn of Africa region. As it pertains to insurance, we're a little bit bullish. Obviously, when it comes to insurance, people only appreciate the value when they need it. This is a time when people are starting to understand the value of health insurance, the value of group personal accident, business interruption. But at the same time, it has meant a lot of claims for people who are particularly more exposed to some of those parts of or lines of business. At the same time, there's also been the question of how do you deal with COVID-19 claims? This is not something that has traditionally been thought about, right? In terms of, a risk that has been included in a lot of the contracts. A lot of the larger insurers in particular are having difficulty to determine, okay, what do we accept as a claim versus what do we decline as a claim? There's a lot of litigation
to interrupt you, would those be the likes of business disruption claims or business interruption?
Yep, and you see a lot of that in South Africa. And so there's a lot of that litigation that's going on because, we're kind of a more small to medium-sized insurer. We're fortunately not dealing with a lot of that. But, that in and of itself is part of the problem. I would say my question, and one of the things that I want to get out of this panel is, okay, well, how do we close that gap? Because largely the story in Africa is always going to be the same. There's a lot of potential. It's the youngest population. It's the fastest growing population. But the reality is you're going to have the tycoons who are going to get rich. The poor people are going to continue to suffer. How are we going to close that gap? And so that's one of the things that I want to talk about during this panel.
So we've got to turn our attention, the conversation, to impact and inclusion. Ejike, if I can come to you, experience and industry.
Yeah, thank you very much, Adrian. Appreciate the opportunity to be on this panel, and thanks to my co-panelists. It's been an interesting year. I think Thierry used the right word. It's been unprecedented. So I think lots of comments have been made about the global impact, Pan-Africa impact. But for me, I think I will just speak briefly about the impact on startups on the continent. COVID-19 came. I mean, when you're a startup, right? My company is a young startup. And you don't plan for these things, right? You are building to grow, be it self-funded, you raise funds, whatever the case is, you are planning that, you are going to improve. And then boom, you got hit, right? So
you're saying you didn't have this in your strategy doc or your business plan?
Exactly. I didn't have COVID-19 my strategy, So it's, I've seen several of my friends have had to shut down, right? I know individuals that have had to shut down, move back to the States to get a real job, right? Move back to the UK to get a real job, because these are people that came back, or people that, like I'm doing, shuttling back and forth, but they have families in the States, they got mortgage to pay or not, but the cash has dried up, right? So they've had to shut down. And so, as I think as Aiden mentioned, the long-term impact, we are yet to see that. So these are some innovative companies, some innovative idea just getting started. And now they have gone back to get a real job. So the rich gets richer and the poor or the young companies struggle a lot. Now, some are doing well. We all see how Zoom have done so well because of COVID, right? The value has skyrocketed. We also seen how Microsoft Teams have gotten very popular, right? But not everybody is enjoying that. So I would like to this. So I think the question you asked us, will this be permanent? For some people, yes, it will be. Some of the friends who have had to go back, it will be. For some investors who took a risk on these startups, we all know the view of Africa from the US, from the West. It's a faraway place, right? There are lots of risks, real or imagined. So you might have some first-time investors and their money went down the drain. Will they invest again? Perhaps not, right? So it's changed ecosystem in ways that will have some long-lasting impact. And I look forward to having further discussions as the panel expands on these topics.
I'm, as I've already noted, I'm based in Johannesburg this afternoon. Some people are in morning time in Johannesburg this afternoon. And talking from a South African perspective, the economy shrunk by 7% last year. The estimate is that we will have reasonable recovery in 2021, that perhaps the economy will grow 3%. But by many estimates, it will only be 2024 before the South African economy is back at its pre-COVID level. So that's an exceptionally protracted recovery period. Alongside that, I can give specific industry experience. I work in the investment management industry, and I can tell you that my industry is actually bigger today than it was this time last year. So I wonder what your observations would be in your geographies and in your industries. Aiden, can I come to you? You've got multiple countries. I'm going to ask you to just talk about one country.
Yeah, so in general, I would say, the economy is contracting in Somaliland and Somalia. At the same time, unemployment is still an issue. We have over 70% youth unemployment, which is ridiculous, and that is continuing to increase.
Wow.
A lot of the larger corporations are starting to let go some of their staff. But the reality is most people are still working in the informal economy. And so when you're talking about lockdowns are not realistic in this part of the world. People are living hand to mouth on a day-to-day basis. So unfortunately now, we're dealing with a much more serious COVID-19 situation in the Horn of Africa and in East Africa and probably other parts of Africa. Last year, the first wave wasn't as bad, fortunately. South Africa has been hit hard from the beginning, but it seems now that the South African strain and the UK strain has now entered the market. And that is, devastating the population. I go through my timeline and it's the amount of people that are dying. It's very sad and it's very scary to see. So that in and of itself is going to have a very difficult sort of recovery path forward for the region.
Let me go to your industry. Let me go to your industry question just in a word or two. Where is your industry today, bigger or smaller versus this time last year?
We're bigger, actually, not by much, but again, we're bullish. We expect for it to grow. GDPs are up. The trend, Africa is still the second fastest growing insurance market in the world after Latin America. So we expect that trend to continue. But it really is going to come down to each individual company in managing their exposure.
Ejike, let me come to you. Comment on your economy over the past 12 months and the pace of recovery, and on your industry, bigger or smaller than this time last year?
Yeah, the economy definitely went down, right, significantly. And Megan is in Lagos as well. She can, add more to that. Because Nigeria had most of my operations in the continent are in Nigeria. The Kenya operation is quite young, limited. So in Nigeria, it was a trifecta, right? A triple whammy. So you have, lockdown happened to everybody, right? And then you have fall of crude oil prices. I mean, Nigeria gets a lot of its foreign reserves from crude oil. So when Russia and Saudi Arabia are fighting on price of oil, right, this, other players get involved. So price was run down over that time. So the value versus the dollar, March last year to March this year has gone down by about 29%, 28.75%, right? So how do you make that up? I mean, nobody's salary has got that, increase. I mean, it's tough to catch up with that amount of change. So in my business, we import. So one of the things we do, we bring things from Europe. So we pay in euros and dollars, right? And we use them, be it in our clinic or we sell to our clinics in local currency. You can't increase your margin that far, right? So you have at a macro level it's a squeeze of the economy. And my industry has been tough as well. Yes, it's healthcare. People think because of COVID, there is progress. Yes, if it's urgent care, there is progress, right? But if it's non-urgent, so we do orthopedics. That's one of the big things we do. We sell some pharma products. So unless you really have to get it, nobody shows up. Everybody's at home, right? Unless it is really urgent, like a surgery, a childbirth, right? COVID exposure, you stay at home, right? So it has also shrunken the sector as well.
If we, so you make reference to the import sensitivity and Nigeria's challenges with access to foreign currency are well known. What's happened to your the cost of the dollar in naira over the course of the past 12 months? What were you paying for the dollar 12 months ago, and what are you paying now?
2 months ago was about 350, 360, 365 to the dollar. It varied, right? Depends on where you get it from. From the central bank, the different rates. For the parallel market, different, as you know, right? Today, I literally bought dollars today, to meet my obligations in Europe. Today I paid 485, right? Okay. That was today's rates. Yesterday, I think it was maybe 482. I mean, so you're from 360, 65 to 480, 485 in 12 months. That's massive. And
you've got to try and pass those costs on to your customers to look after margin.
Yeah, you will try to pass on, but you cannot pass on that percent to the customers.
Yeah.
So you cut out your margin, and as a startup, it impacts you. Again, as a startup, you don't have that much a big bank, right? Your pocket is not that big. So when you are giving off of your margins at a point, unless you are very careful, you go in the red, right? And that's reality. So the euros is even tougher, right? So the value of the euro has varied as well significantly. So if I'm paying to Germany, it's euros, somewhere it's dollars. So it's a daily battle to maintain some sense of stability. I mean, we are doing well. We're able to beat last 2020 numbers was better than 2019 numbers in local currency. But when you dollarize it, you lose, right? So it depends on how you get your success. So the market is growing. Patients are coming through. We are making revenues. The team is working. We're expanding our offices. But since you're earning local currency and you're exposed to that massive difference when you dollarize things, you still feel the pinch.
I'm going to flip or leapfrog over you, Terry, and leave you out of this part of the Q&A. I'm keen to get to Megan and ask a little more specifically about industry impacts. So, one of the big observations or issues in this environment is that the recovery can't be about building back the same. It has to be about building back different. So I wonder what, Megan, what your thoughts are. How does business respond? How does government respond? How do investors respond in this building for recovery and building better?
Yeah, thanks, Adrian. And as I was preparing for the panel, the post-COVID panels, you have to bring a little bit of hope. So I was reflecting on one example from our work, which is that we invest in agribusinesses that are working directly with smallholder farmers to try to improve their yields or improve their take-home income. And one trend that we've observed, across the region is that there's a huge preference from investors, even from the development community, to push smallholder farmers into high margin crops, cocoa, pineapples, coffee, anything that can be exported and where they see those margins. The reality is that, that 80% of Nigerian farmers are not working in cocoa. They're growing cassava or maize or what have you. And yet securing investment capital to be able to professionalize those operations or build up those businesses has been harder to come by. And in a country like Sierra Leone, where they import, 60 to 70% of their rice that they consume in a given year, COVID really put a spotlight on the fact that when those prices tripled as a result of the global supply chain disruption, you now have a population whose staple crop, has become unaffordable overnight. And it's really shifted some of the way the investment community, maybe more specifically the impact investment community and development actors, are willing to say, wait a second, we need to strengthen African food systems. We need to strengthen country resilience in terms of being able to produce these staple crops to be able to feed our own populations. And so, import substitution has been lingering for a long time, but I think it became much more real on the backs of COVID, the urgency, and we're starting to see more capital flows to entrepreneurs that are working in some of these staple crops, and investors willing to take bets on innovations on those models that enable not only economic prosperity for the smallholder farmers, but have a food security component as well. And so, I hope that becomes an opening or a foothold that sticks in terms of one shift or transformation that we're seeing.
Before you go on, if I could ask you sort of three quick sub questions. What is when you talk about investment into a business, what is the average, what are we talking about in terms of dollar size investment? What's the average size of capital allocated? If we were to aggregate that for a country, for Ghana, for Nigeria, can you give us a sense of the total market that you imagine is investable? Do you have any number? And then have you got a particularly interesting business model example that perhaps has iterated, or the word of 2020 pivoted through the pandemic?
Yeah, sure. Let me take the first question. I mean, I think breaking down the investment landscape kind of breaks down across a capital continuum or the types of enterprises that those investments might be attracted to. Acumen focuses on companies that are generating anywhere from $300,000 or $500,000 in revenue to $1 million, maybe. We do ticket sizes of about the same size, depending on who else is participating in the round. But I think that overall, and the landscape of opportunity for social entrepreneurs and social entrepreneurship in the region has really picked up. I think in Lagos, it's pretty heavily concentrated on tech and financial inclusion. When you bring agriculture, renewable energy, some of these other sectors into the mix, it becomes a lot bigger. I don't have a good number offhand that accounts for all of those.
Sure.
But yeah.
But do you think we're talking about $1 billion or $10 billion or $100 billion?
$1 billion. In terms of these like startup models, right? And social entrepreneurship models. Yeah. I think there's other stuff happening on a larger scale. Now I've lost.
And I want to ask Terry a similar but different question in a moment. My question about business model pivoting for you, Megan, and Terry. I'm interested what Cummins has done to pivot the business model.
Yes. So no, thanks, Adrian. Obviously, as I said earlier, we didn't anticipate this pandemic. But we had to react very swiftly and make fundamental changes in the way we do business. We realized early in Q1 last year that our revenue outlook was going to be down about 20%, for the year. In part because, Cummins is diversified. We do in big power generation project. We power mining equipment. When there are greenfield or brownfield investment, we play in. So many projects during that time were delayed or simply canceled. So we needed to basically react quickly, save of, letting go people, closing entity. We realized we need to maybe reduce the hours of work and then reduce pay to keep more employees. So for instance, we reduce pay in the company from 50% from our CEO all the way down to 10% to some exempt employees. We also changed quickly the way we work. So typically my staff meeting was a sacrosanct face-to-face meeting for me. And I have members of my staff flying in from Accra, Nigeria, Lagos, Dubai, Casablanca. So for a year now, we've all had staff meeting on Zoom. No more travel for staff meeting. And that drives not only safety from a health standpoint, but also cost savings. So we prioritize also support to critical sectors of the economy because, the mining sector in South Africa, for instance, that produces coal to produce electricity. We prioritize keeping our customer in mining operation up and going. So service technician, we got qualification as a critical sector to send technicians to support those places, as well as data centers and providing a continuous operation for critical hospitals. What we also did was prioritizing and shifting quickly what we invest in corporate responsibility, because I think Aidan referred to that earlier. What this pandemic meant in Africa for many people, especially in poor community, was, the lockdown meant simply stop of income, which is poverty and which could lead to death. So we changed our grant model from priority in education and social justice to quickly emergency grant to provide just basic food, to the township and provide rice and some other things. So that kind of help. And as we anticipate the recovery, it's going to be different in different countries as different projects come to stream. I have to admit that Cummins being a global major, it was helpful for us that while the rest of the world was struggling, China beat their annual operating plan. China recovered quickly and was firing on all cylinders. So as a global business, that was helpful. But for us on the continent, we needed to readjust a little bit and keep our employee, keep the maximum employee as possible.
You've flagged an important point about cost savings and how the COVID-19 might have a silver lining in that it's changed ways of doing business. For all of the panelists, here's my question. I wonder if this changed way of doing business is permanent, and if there are cost savings in travel, could there be other hidden costs such as lost connection? Doing this conversation across digital is very different than if we were sitting around a table and looking at body language and interaction. So do you think that this, are the cost savings real, or are there some other hidden costs? And do you think that this way of doing business is permanent, or will we go back to what we knew before? Aidan, can I start with you?
Yeah, I think we will go back to where we were to some degree. I think as more people get vaccinated, the likelihood is that we will start meeting face to face. In Africa, like most emerging markets, business is really done in person. So it has been difficult to close deals in Zoom. Whereas, when you're sitting in front of people and being able to take them out and things like that, you have more success. So most likely we will get there. Nothing in life is ever permanent. So to Megan's point, we want to also leave with some optimism. It's been a tough time, but I expect that as more vaccines start to arrive, as we're seeing in Africa, and hopefully some level of herd immunity, and we can get some of these things under control, that we'll get back to normal. Or as close to normal.
What we know about the continent as an aggregate is that there is a massive infrastructure deficit that translates into inability to connect. So even if we wanted to meet face-to-face, and it would be very difficult for us. We'd probably have to fly into Europe and then fly back, right?
100%.
So could this way of doing business square up to some of those deficits? What do you think, Ejike?
Yeah, I think I second Aidan's point. I think that definitely that things will go back. I mean, might not be 100% back, but Thierry is right. There are cost reductions in dollar terms. Many companies had to right size. I did the same thing as well. I used that time to get rid of people that were not performing very well. Reduce salaries across the board, different percentages, because I was paying people to be at home, and I'm not. It's still a small young company. But I do think that there are costs that we are not capturing very well. I mean, there are mental health costs, right? This whole Zoom thing, it's not as good as seeing, this is, 4 MBA, 4 Kelley grads. We can't even hug each other, shake hands, right? It's a screen. Everybody's face is tiny on the screen. So I think that we are losing connections. I think that, the bonds that drive global business, the bonds that drive engagement, I think it's going down. I mean, I've, just like everybody here, we travel around the world to have a 3-hour meeting, right? And a 2-hour business dinner, and you travel back around the world. But that's how you close deals. That's how you shake somebody's hand and close the deal. You can do marathon Zoom sessions, save loads of money on travel and hotels. But I think that businesses need to find the right balance. Now, do we need to be traveling every month, right, to Joburg? Does Thierry's team need to all every month be in Joburg, every 3 weeks heading out? Maybe not, right? Maybe once every 2 months, right? So there'll be a right balance. But I do think that for businesses to survive, to bounce back, especially in emerging markets and in Africa, the connection needs to get back. It really needs to get back to some degree.
Terry, I want a forecast from you. In what year do you think we will have your first corporate getaway? Do you remember those things?
Oh my God, it feels like it's all ages. So, well, what that means is really when do we anticipate the post-vaccine era in Africa? And unfortunately, Adrian, it's everyone's guess. In Africa, while countries like Ghana have done well, because as of today, everybody 30 years and above who is willing to take the vaccine in Ghana can get it free of charge.
Yeah.
In other places like Nigeria, even South Africa, we just have no clue when this vaccine will be available to everyone. So, and really get away and other form of, business gathering will only be safer when, that herd immunity is achieved. And unfortunately for Africa, that timing is difficult to predict. What I would like to say, though, is that to your earlier point, there is always some silver lining. Africa, intra-Africa commerce is still very, very a small percentage of the total commerce Africa does with the rest of the world. There's only a handful of countries in Africa whose #1 trade partner is another African country, and those may be just Botswana and Namibia with South Africa. Literally every other African country has as big a trade partner, UK, France, China, and all this. Maybe this is a time for our government to really start thinking about boosting the infrastructure, the African Free Trade Organization, making it a true reality, so that just across border, people grow cassava in Nigeria that could come to Cameroon, in Cameroon that could go across the border to Nigeria when yam is making the other road. So why don't we just enhance those things and increase the GDP of our country without depending on the global supply chain? That is only for food, but we could say the same on other things. I really don't believe that we will have to go back to the old normal. I don't think it's going to be practical. I think each industry will have to figure out what works for them. In our company, for instance, for me in Africa, everybody who can work from home will continue to work from home until that when it's safe to do differently. But we have people who will have a hybrid model whereby you go to the office maybe twice a week as opposed to 5 days a week. And we have people who cannot not work from the office. Like if you are a workshop technician, you can't talk a big engine from the comfort the comfort of your home. You need to be in the workshop. or you're driving a forklift in the warehouse to handle goods. So we will have to figure out what really works well to serve our customer needs. And definitely the travel for internal meeting will go away. Obviously, closing big deals in Africa, the cultural piece come in place. A customer will need to see you, to have a drink with you, to kind of, shake your hands. And so it will be a sum of all those things. But we as Africans and in Africa, we need to really be thinking both government, private sector, and then not-for-profit on how to integrate, different elements in the solution of the future.
Your point should not be lost that 2021 is the birth year of the African Continental Free Trade Area and Agreement, which brings together 55 countries and more than 1 billion people, making for the largest free trade agreement ever. And the prospect is extraordinary, not only because of the potential size of the market, but by virtue of the fact that you point out, Thierry, that we come off such a low base. Inter-African trade is 10% of total trade, whereas Asian and European interregional trade is 50 and 60%. So the prospects there are extraordinary. Megan, if I could come to you and ask, how feasible, viable is it for a small business to raise capital on Zoom? Is that possible?
I was thinking as you were talking that, I think unfortunately the Zoom existence and the existence outside of Zoom in some ways exacerbate, when entrepreneurs are trying to raise capital, it's so much about the social networks, who you can get introduced to, who you can get in front of, and having lost kind of the conference circuit or the business plan competitions or some of those pieces, I think people's appetite to log into those events on Zoom a year later is very different than it was in March or April of 2020. And so I think it's just become harder to get people's attention and get in some of those, those introductory places and places to really build out your network. And you're a little bit more restricted to the network that you already have to be able to facilitate those introductions and get some of those early conversations. For us as investors, we had a pipeline of, or a number of companies in our pipeline at the beginning of 2020. We ended up pausing new investments for a period, putting some emergency cash into our existing portfolio, and now are resuming. So there's kind of a hybrid of ones that we already have met in person. We've seen the operations, we've been to the factory, we feel pretty comfortable. And the ones where we're just starting out, just figuring out how we can travel safely, because I wouldn't write a check without going to see the thing and touch the thing and meet the humans. And so at some point there has to be a way to figure out how to do that safely. And luckily, I mean, Nigeria's numbers right now are wildly low, and that doesn't drop the risk to zero. But I think if you're playing it smart, there are some opportunities to do a little bit of the in-person stuff that's needed.
Before Tim starts jumping up and down and waving at me in the chat box, perhaps I can start to bring our conversation to a close. And I'm going to ask you in your closing comments or observations to respond to a two-pronged question. The first part is, what do you see that is particularly interesting, energizing, exciting on your business environment that makes for a good 2021? And not unrelated, what do you think needs to be done differently in your country, in your community, in your company that will make the build better? Aidan, can I start with you?
Yeah, absolutely. I think one of the most interesting things for us as a business has been digital, the use of digital, trying to kind of get some of the cost savings that Thierry has been mentioning, maybe on the claims process, on the underwriting process. A lot of that has been born out of this need for less human interaction. So giving technology to some of our salespeople and things like that. Somaliland and Somalia is already a cashless society, which is really great. They're very advanced in terms of mobile money. So we've been able to integrate that very well. In terms of what we would like to see, more infrastructure, I think is the most important thing. I had an interesting conversation with the head of a hospital system. She had a brand new mobile clinic that she has not touched. And she said, because we have no roads and I cannot use it. And, so infrastructure is very real. It has real business implications across the board. And so I would love to see that from sort of the governments in addition to many other things, but we'll start with that.
Thierry could not agree more. Thierry says that infrastructure would be an excellent idea.
Absolutely, infrastructure, but also new tools. Adrian, you know that in Africa, the digital age is offering us another opportunity to leapfrog and to kind of close the gap quickly. So as more network provider move to, like 4G, 5Gs, there are more data center being built, and that's also business for me, power generation. But also, there is a lot more. The education system, the way we train people, some job will structurally go away from, the way we used to do them. So that's the new economy, and we don't need to go through all the steps that we could just jump and leapfrog to the new steps. But most importantly, someone mentioned earlier, I think it was Ejike, the mental health. As business leader, we really need to pay attention to that, especially us in Africa. We don't usually talk about that, and it's a reality. The other element there is really the social impact of working from home. So in Africa, women really work 2 shifts because you are working at home and your husband is working at home, but you need to also make sure it's an expectation because of the culture. And sometimes when we have multi-generation home, your in-laws or your parents expect you to make sure the kids are taken care of, the food is taken care of your husband. And so this is leading to issues for women. So as leaders, we need to really be also bringing the conversation around gender equity, gender inclusion, so that all these elements are not really, don't get in the way of that recovery. So it's going to be fundamental for us to open our minds and to increase our corporate gender inclusion or gender intelligence to integrate these elements on the way we work, and then the infrastructure, of course, and the tools, that allow us to work in the new economy as we build a new normal. Yeah.
In the size of a tweet, 140 characters or less, Megan, give us the silver lining and what needs to be done better, differently.
I'll take them in reverse. What needs to be done differently on the part of impact investors is to stop replicating the Silicon Valley models in Africa. I think you end up extracting most of the value and taking it back out. And what's exciting is that we're starting to see some investors be more creative, both about the companies that they invest in and how they structure those investments, whether it's self-liquidating instruments, so the company or the entrepreneur, the community are really capturing that value and capturing that wealth rather than sucking it out, and look forward to being a part of some of that more creative and innovative financing mechanisms to fuel these enterprises, but enable that wealth creation to be more distributed.
Ejike, 140 characters or less, tweet sized.
I think that, wherever there are challenges, there are opportunities. So I don't see it as all bad, right? When things are tough, that's when really strong people emerge. Those that survive are stronger. So the crop of entrepreneurs, the crop of businesses that survived last year, I believe will last much longer. It wasn't easy at all. So I see that as a good thing. My team and I will survive. It was very scary. But I see us being stronger. Now, the second question, what can we do better? I've got to work harder, but smarter, right? I need to use technology more. I need to engage my clients more, my partners more, my patients more. I need to look at funding a little differently as well. So I'm revising how I've seen things, but better, faster, smarter. From me personally down to the rest of my team needs to happen and quickly.
Tim, I'm going to hand back to you. I assume that's the protocol. It's my job in closing to thank the panel members for a really engaging conversation. You've brought perspective, you've brought experience, you've brought knowledge to the conversation. Thank you, and to the participants who've been with us in this conversation. Thank you. Tim, I'm with you.
Thank you, Adrian, so much. And thank you, friends, so much for sharing your thoughts with us today and inspiring us and helping us to remain optimistic, right? Take the best from what we're learning and apply it. And what was good and worked well before, certainly use that again, but also be open to the change and making sure we're caring for one another along the way, right? A question came in, I thought it was very thoughtful. And for all of you, the question is, are you seeing additional synergies being created between countries within Africa as a direct result of the ongoing pandemic? If so, what do they look like? And if not, how might this be facilitated to accelerate growth for all in Africa?
I can just start. I think Thierry brought up, and also Adrian, I think the Africa Continental Free Trade Agreement. I think that's going to be critical. The question is, can they implement that? It will be then one of the largest, trading blocks in the world. It's going to be very important because in my view, Africa needs to focus on production. You cannot continue to have a situation where, and this is not to pick on Nigeria, I just love the case where they're one of the largest tomato producers in the world, but yet one of the largest importers of tomato paste. That's something that we see across the continent, whether it's in Kenya, who produce really great tea, and then we end up importing English breakfast tea. That is going to be incredibly important. I think the implementation of that trade agreement is going to be critical, and also then putting investment towards small to medium-sized enterprises that are producing physical things that can be traded and not just services.
Thank you, Aden. Ejike, what are your thoughts to share with us, please?
Yeah, I agree with Aiden. I think that the trade agreement is one, but I also think that the mindset shift is critical, right? So due to historical reasons, Africans tend to look outwards, right? So you speak English, you look to the Anglophone countries, the UK, the US. You speak French, France. If you speak Portuguese, Portugal, and so forth and so on. So it's about time for folks to really look inwards, right, and find the good things. Like, Ada mentioned Kenya makes good tea. I mean, how many Nigerians know about Kenyan teas, or Kenya is able to make tea, right? Or Nigeria being able to do tomatoes and so forth. So there needs to be that conversation amongst the countries. Now the question is how, right? And that's where the problem is. So I think someone like Megan, investing teams have that power to facilitate conversations, right? I like what Megan mentioned, that to stop replicating the Silicon Valley model. It's really critical because we all know that for businesses to grow, you need investment, just a fact. So the question is, who is investing where, why, how, and what returns they want. So once we start having those conversations, I think it will drive things in the right direction. And it is starting. I'm having chats with my friends in Zambia, in Zimbabwe now, Kenyans and so forth, more than before, because nobody can travel anymore. We are all stuck. So it's getting started, but not where it needs to be yet.
Thanks, Ejike. Megan, what are your thoughts to share with us?
I won't take too long because Adan really spoke my mind, which is that, the underlying infrastructure that's needed to make production and manufacturing possible. We see such a glut of interest in financial inclusion, in tech, in app development, but both from an employment perspective and a trade perspective, we need to have that capacity, and that's going to require more I don't know if collaboration is the right word, but government and international assistance, like doing their part to help that infrastructure get to the right level, so that that manufacturing and production can be done in an economically viable way. I'll just do a shameless plug that our sister fund is invested in the largest tomato processor in northern Nigeria now, so trying to turn that tomato story around. Yeah, thanks.
Fantastic, good news. Thank you, Megan. Thierry, what would you share with us, please?
Yeah, I think is in line with what others have said, but I want to tweak it to say, sometime in Africa, we always expect government to lead the way in creating that Pan-African market, that Pan-African free trade zone and all that. But I think private sector can start. You know, I was pleased to hear Ejike said he has like a branch in Kenya, you know, maybe Aden. You know, Somalia or Somaliland shouldn't be your only market. When I am called to speak to the African diaspora in Germany, in Canada, in places, I'm like, think of Africa like your new market. Maybe returning to Africa for Cummings has helped me really see that for real. So today, even private sector can really consider the continent as a single market and have operations. You don't need to, for that free trade agreement to be around to go after opportunities in countries that are not necessarily your base country. And I think that's going to help.
Excellent. Thank you. Adrian, I would ask you as well, any thoughts to share to the question that came through?
Sure. I thought as the panel host, I might get a free pass on that, but a couple of quick observations. The first is I had the privilege of interviewing the Chief Technology Officer of the Ghanaian COVID-19 rapid test. And her observation was that their ambition is to turn this into a Pan-African product. So they're not thinking about Ghana, they're thinking about the continent. And I think that's just a very narrow observation, but a powerful ambition. The second comment I would make is that we have seen the way or the lead taken by some regions, and the East African community really stands out here, where the East African community has been an impressive integrator and can show the way for the other countries that make up the 55-country bloc that are trying to work their way through a myriad of policies and paperwork and regulatory barriers and obstacles. The third, and I'll put a silver lining on this, is the tragedy of Africa is the extractive relationship with the world and Africa. But what that means is that the infrastructure, Africa's infrastructure, is set up to be outward facing. And that outward facing can be turned from having been a tool of extraction to being a tool of inclusion.
That is excellent thinking, Adrian, a tool of inclusion. And I think on that note, I would like to thank the panelists and our moderator today for sharing their excellent thinking, for helping us better understand the struggles, but some of the opportunities for your beautiful continent. And we are so grateful for your time again today, shared with us, my Kelley family members and our Kelley family member and Adrian, who is joined us. And we're so grateful for everyone's time. And we also want to thank you, the participants, for joining us today. Thank you for making our roundtable discussion series such a successful and important set of discussions being held around the world. To that, Zach, thank you for wrapping it up for us. And thank you, friends, for your participation.